Hello guys. So today we will analyze 3i Infotech, mostly because recently it sold out its product division for 1000 crores, and people are actually appreciating this decision because the total revenue for this division was 443 crores as of year ending March 31, 2020, and this is a debt-ridden company which has around 750 crores of debt, and this is the main reason why this company was actually not able to uh, provide a good increase in the share price, even though it was constantly in profits for the last few quarters. So let us analyze whether it is truly beneficial to the shareholder or not. So 323 crore is the net worth of product division as of last year, ending March 2020, and the total consideration is up to 1000 crores INR. So it is subjected to uh, closing adjustments as of March 2021. So we may see that total amount may be less than 1000 crores. It may be around 950 crores, 960 crores. Okay. But it will not exceed 1000 crores, that for sure. So this is the notification which was sent out yesterday. And now we will analyze what will be the performance of the company when the product business is carved out and it is sold out to another entity. So what will be the performance of the remaining business over the next few quarters? So I have prepared an Excel sheet, and I would like to show that to you. So first tab has the revenue, right? So in March 2020, the revenue was 1141 crores, trailing 12 months. And if we talk about September 2020, the trailing 12 months revenue is 1056 crores. The reduction is mostly due to uh, a business being sold out by 3i last year for 23 crores. So that's why you see the reduction in revenue. And based on this, uh, you know, trailing 12-month figure, I have reduced the product revenue as well, keeping the percentage 38.8 constant. So service revenue is 646 crore, and as of today, the market cap is 941 crores. So fair enough, not so bad. Uh, let's talk about net worth. So as we saw, right, the product net worth is 323 crores and the total net worth is 391 crores as of March 2020. So the remaining net worth for service business is 68.44 crore only. Similarly, I have extrapolated this net worth percentage for September 2020, and you see this difference, right? 73 crore will be the remaining net worth for service business. Now we talk about the debt positioning. September 2020, the debt is 741.7 crores. This I expect it to be reduced by 700 crores. They may not keep themselves as a debtless company. They may have some amount of debt. So that's why I've kept 41.7 crores. There are other contingent liabilities also, like there is some tax demand. So that I have not considered here. I assume that that will be sorted out by the government. So 41.7 is the total debt as of December 2020. Suppose this transaction takes place within next 3 months, within next 1 or 2 days. So then the debt will reduce to 700, reduced by 700 crores, and the equity, as I, as we showed, as we discussed the net worth, it will be 73.03 crores because the remaining equity will go with the product business, and the cash that will increase by 200 crores. So this is the calculation, assuming the inflow is 950 crores, uh, assuming 5% reduction in the closing adjustments, it will be 950 crores, and after debt reduction and capital gain tax. So I have assumed the fair value of product business as 750 crores. So based on that, there will be 20% capital gain tax and 25% actually I have considered here. So this will give us around 50 crores of capital gain tax. So net cash inflow will be 200 crores. Okay. Now this is a good cash positioning for 3i Infotech, and they can have some capability to go for acquisitions for their service business. Right. Now this is P&L projection. This is very important, and I have actually gone for a lot of research while computing this. So we need to understand about the two businesses, product as well as service. Right? For product business, we need to calculate the employee cost to revenue percent. And for that, I have considered two companies, Intellect Design Arena and Ramco Systems. Both are product-based companies, and this is the employee cost to revenue percent for both these companies. I have taken average of this and considered this as the employee cost to revenue percent for product part of 3i Infotech. Okay, so that comes around 46.5%. For September 2020, the total revenue was, this is quarterly figures, okay? The total revenue was 250.8 crores. And if I reduce the product revenue based on the percentage revenue contribution from product business, it will be 97.31 crores, and service revenue will be 153.49. Total employee expense was 176.84. It included the subcontractor employees as well. So if we see, the total employee cost to revenue percent was quite high, 70.51. If we reduce the product employee expense, then we get the service employee cost as 131.59. So product employee expense was calculated as C6, which is product revenue into average percentage. Okay. So service employee cost to revenue percent is quite high, 85.73%. And so profit before tax is including everything, right? So C5 minus C8, C13, C14, C15. So this is 19.81. Now, if we talk about December 20 and considering that 3i expands its revenue by 5% per quarter, right? So 263 will be total revenue, service revenue will be 161.16, and service employee cost, I have actually uh, considered that employee cost will reduce by some amount. So D12, right? D12 into D7 by 100. Okay. So this is 131.26, and here you see service employee cost to revenue percent. So in September 2020, it was 85.73. I have reduced it by 5%. So this due to operational efficiency, obviously, as it has lots of cash now, and it can go for better HR transformation and employee retention. So that's why I have reduced it by 5%. So it will come around 81.45%, and the profit before tax will be 11.76 for December 2020. So you see that even after selling out its product business, 3i is not able to increase its profit before tax, and it is actually reducing because its services business has more employee cost to revenue percent ratio. And if we consider March 21 results as well, going by the rosy scenario of revenue growth projection 5%, and we continue with the operational efficiencies, and I have reduced the employee cost to revenue percent by further 5%. So 85 to 77, right? Then we will see the profit before tax increasing by around 3 crores from September 20 figures. So it will take some time to give a better performance going ahead. But yes, we can see that finance cost will be reduced to zero, which is currently 21.59 crores. It will reduce to zero, but it will not impact the profit or the bottom line for 3i for the next 6 months. So that is my analysis on 3i Infotech. Take your own decision. All the best. Thank you very much.